Lundin Petroleum reported first quarter revenue of just over $690 million, with its EBITDA number beating the highest analyst estimates. Joining us now on the phone is Alex Schneiter, the CEO of Lundin Petroleum. Alex, great to have you on the programme again. Let's start with the top-line performance at the business. First quarter revenue coming in well above the estimate that I'm seeing here. Was there something that the analysts missed? What explains the fact that the top line has come in so strong versus what was expected?
Yes, good morning. No, I think the strong numbers really on the back of very strong production for our key assets, and we've seen very excellent uptime, and we've reached production level above the upper range of the guidance, and that's really led our numbers to be very strong. And this is coupled also with a very low operating cost. For the first time in the history of the company, we've actually reached operating costs below $4 per barrel, which compared to our peers in the whole European market are, I would say, record low operating cost.
Record low operating costs. Do you see that then, Alex, continuing for the rest of the year, that kind of cost picture for Lundin?
Not just for the year, for a long time, because we are currently working very hard to put on stream one of the largest projects in the world offshore, the Johan Sverdrup, and is due to come on stream by the end of 2019. By that time, we will continue to operate in very low. We will generate very low operating costs for 10 years or for the next 10 years. So this number is here to stay, and this is the result of very efficient and young fields such as Johan Sverdrup and Edvard Grieg, which will be part of will make part of the majority of our assets in Lundin Petroleum.
Of course, also going into your thinking at the moment are assumptions around the oil price, Alex. As I sit here this morning, 67.59 is where we trade on WTI, 73 on Brent. What are your expectations around the oil price? What goes into the models at Lundin?
Yeah, I think we're not surprised to see a strengthening on the oil price. I think we've seen inventories reaching the 5-year low, or 5-year average, sorry. And we also see a very strong demand. And so that has led, and of course, the OPEC quota and the discipline of the OPEC quota. And that despite the strong growth in the U.S. Oil production. And I think the oil prices, in my view, is there to stay at this level. And but I also think in the future we're going to see perhaps further strengthening. And that's a result of the very low investment we've seen in the last 2 years in the industry. And that eventually will be also seen, and that will probably trigger a further strengthening on the oil price.
So do you think there's upside rather than downside risk to the price at the moment, Alex?
I would say I'm relatively optimistic, and I think there's more upside than downside at this point, particularly when we're going to enter in towards the second half of 2018 and 2019. Yes, definitely.
When we talked about the cost base, you were giving us your strengths in that area and the way you've managed to drive down those costs. Alex, when you look at the industry, you're not concerned then that we return to the sort of cost spirals that we saw in the decade running up to 2014? Do you think the industry will avoid that kind of cost spiral environment?
Yeah, it's a good question. I think right now we don't see it. I think there is a recovery in the market and in the industry in general, but I think cost remains under control, and it's obviously something we have to be very careful. But as a good example, take our Johan Sverdrup project, a very large project, and since we submitted the plan of development, and today we've almost saved 50% in cost, and net to Lundin that equates to almost $4 billion of savings. And of course, now we have to be really keep an eye on the market and making sure that we don't see again what we saw 4 or 5 years ago, where there was strong inflation. But at this moment, I would say that there is still large supply, and I don't see yet any sign of inflation. But it's obviously something we have to keep an eye.
Yeah, you don't see it yet, though. In terms of your return of cash to shareholders, you announced your first cash dividend, excuse me, earlier this year. With the oil price, you say there's upside risk there. Your cost base seems to be under control. Is there the possibility then that you return more cash than planned?
No, definitely. Tomorrow we have our General Assembly, and we will be proposing to pay $365 million of return cash to the shareholders. And we already stated that next year we want to double this amount to 350 million as a minimum. And of course, by the time Johan Sverdrup comes on stream, which is end of 19, we will have the ability to further increase that number. So the intention is definitely to increase the dividend and redistribute some of the cash to shareholders. And that's always been the plan. Well, but of course, we thought to do this at the time when Johan Sverdrup was coming on stream. But based on the numbers and the very solid numbers, we're able to do this now before Johan Sverdrup first oil, which is very good news.
You've talked about doing deals, Alex, with the oil price looking stronger. Is that pushing up the price of potential targets? What's the window for doing M&A in the sector, do you think?
It's more difficult. Of course, now people, particularly very good assets, people have a high expectation. So certainly the strengthening in the oil price has made deals more difficult. But I think you always have to find an angle, a win-win situation, and deals are still possible. And I'm expecting to see some activity on that level, but you're right. I mean, with the oil price strengthening, it's going to be the expectation is going to be higher, no doubt about it.